Hello, welcome to Modern Investing. We start the show right now, and we are going to talk about the present situation of the market and what's moving it, and where to moving it, and how to move it, and how to participate in that and make some money. Why not? Okay, let me introduce my guests for today's show. It's Jim Ida, Foundation.
Hello, Sasha.
Hi, and also Nguyen Phan. Hello, Nguyen. Welcome to the show. I don't see Nguyen now. Okay.
There he
Hi,
is.
how are you?
Good.
Okay, so let's talk about the market today. As we know, there is a great disconnect between the real economy and the stock market, and how to mitigate that. On one hand, the new inflow of money moves stocks even higher. And the reason for that, primarily reason is that on a fixed income, you can earn about 1% a year. And that's not nearly enough even to have inflation in check. And so it's forcing really people who may not even consider normally to invest in stocks, but they almost against their will are forced to do so rather than be happy with 1% return. So now let me ask you, Jim, what do you think about the present situation in the market that can disconnect with the real economy and how you mitigate it?
Yes. Well, the first thing I do is I look at the stocks, and when I see green, I know Sasha is happy because green is good. And but the stock market, as you say, is not the economy. There's a great divergence between what's happening in the stocks at the highest levels, the biggest companies in the Dow, in the S&P, and even in NASDAQ. And what is happening to the average person in their day-to-day lives. The average person is feeling pain and suffering, and the stock market is just happy as can be. How can those two things be happening at the same time? I think part of the answer is what Sasha just referred to. You have no real options. You don't have the idea, you can't put it into CDs, which when I was managing a not-for-profit foundation, we did always have part of our portfolio in CDs. And the last rate that we invested in when I was there was gave 2.5. And we thought that was miserable. You can't get 2.5 now. So, you can't invest. Yes. So, 2.5 looks great now. But even so, we were thinking, that's not really much money for our purposes, but we had investments in the stock market as well. So it's just part of our portfolio. And so now we have no other options. I can't invest in a CD for 1%. I can't put my money in my savings account in terms of investing. It makes no sense. I don't get any return. So I have to play the market. The money has to go into the market for any hope of a decent return. So I think that this is artificially propping up the market compared to what the reality is in our day-to-day lives.
Very well. And Gwen, I know that you are about to start to invest. So how you see that picture, and what are your thoughts on this?
Well, I guess my thoughts are mainly as a new person doing all of this. It's how do I mitigate the risk, and when to. there's a lot of things to consider, but obviously don't want to put every all my eggs into one basket. So I'm thinking starting small with a moderate amount would be ideal, and then as I get more experience, I can add more into the list, and then be able to do um, an option strategy, for example, or maybe even leverage that on a group that has cheaper stocks and do the same thing. Um, Ideally, that's where I want to get to, but I need my baby steps.
Hmm. Yes, okay. I think it's very sound strategy to start small. The only thing is, I would advise not to look necessarily into cheaper stocks, because cheaper stocks are not necessarily better than expensive stocks. In fact, the exactly opposite might be true. So let's see if you have solid stocks like Microsoft, and they're like 110, $11 a share. And let's see, you can buy a bunch of smaller companies trading at $5, $10 a share. But in fact, it might be much riskier to buy those companies than Microsoft, because Microsoft is a company with a great track record, and I don't like, I'm a big expert on technology issues, but the Microsoft business model is extremely strong, viable, and its price of its stock reflects it over and over again. And their earnings reports are pretty good. Now, remember what's happened on their last earning reports? They got beat bottom line and top line and all kind of lines, and their stock went down because people were expecting even more. Okay, so well, it recovered very quickly, of course, but that was a day of their earnings. But it doesn't scare people, because almost any portfolio, whether it's a pension fund, a hedge fund, I don't care what it is, they must have Microsoft, because how they can justify to their stakeholders that they don't have Microsoft? Who are they? How they can make a decision not to include Microsoft in their holdings? So it's whether it's Warren Buffett or it's anybody else, they just must have Microsoft. The only question is, somebody may have 10,000 shares, somebody may have only 5,000 shares, somebody may have 10 million shares. So it's just a matter of the size of their holdings. But Microsoft is part of every holding. Microsoft is also part of S&P 500. It's part of Dow. It's part of anything. So if market moves up, the Microsoft will move up simply because of market moves up. It may do better than overall market simply because of their unique position, but they will do just normally they will do just as well as overall market. So if you believe that market will continue to go higher, then Microsoft is almost number one holding in any portfolio. Um, lately, gold stocks attracted a lot of attention, and but there is a difference between gold itself and the gold stock. Okay, the gold went quickly over 2000 levels and came back a little bit to 1850 or so, and now it's going back to 2000. I've heard the opinion that because of a lot of novice investors got into gold contracts on the futures market, and as it so often happens, they were ruthlessly cleaned by market makers and experienced traders, and that's why the gold went down. So they had to deal with margin calls and all other niceties. And after all the whatever they covered the calls, or they had to cancel their positions and take losses. Um, it depends on individual circumstances, but that was one of the reasons that gold had a hiccup. But now it's over 2,000 or so. Now, the interestingly enough, that the gold stocks, I have two of those. I have gold, symbol gold, which stands for Barrick Gold. That stock did quite nicely lately, and also have Newmont Gold. Newmont, in my opinion, it's better quality stocks than Barrick, but it's also much more expensive, more than twice as expensive. So, so probably people who are looking at the gold stocks, maybe they will be attracted more to Barrick simply because it's cheaper, a stock more affordable. So for the same amount of money, they can buy at least twice as many shares, and maybe that attracts more investments into Barrick. That's understandable. Now, both stocks you can write covered calls against. In fact, my way of acquisitions of these stocks was I didn't buy shares of neither of them. I just sold puts, which allowed me to buy shares at predetermined price at a certain period of time. So, for example, in Barrick, which is about $30, slightly less, I sold quite far, not really that far. I think I sold the 11th, let's see, September 11th puts. Hold on, let's see now. Gold. Okay. I sold um, puts expiring September 11th, sorry, 18, September 18 puts. I've collected for each put $3.82. So my cost, 30 puts, if I will be exercised, that means that I will get each share of Barrick at only $26.18, while the stock is close to 30. So if that happened, I'll be happy. Now, if it's not happening, I will just keep the premium. So if I sold 10 of those puts, that's $3,800 and $3,820. Uh, okay, so I'll just keep it. What's wrong with that? Um, yeah,
Sasha, what's the ticker symbol for the gold investment company that you mentioned, Newmont?
Newmont, NEM.
NEM.
Newmont, yeah, NEM. It's a Newmont Gold. Now, there I use the same strategy. I've sold 70, also September 18, $70 a price puts. I've collected for each put $7.60. So if I will be exercised, my price of Newmont share will be only $62.40. Stock is now about, I don't remember, $67, $68 or so. So I'm looking forward actually to be exercised. Why? This is why the reason is I could sell instead of 70, I could sell, for example, 60 puts, and most likely I would never be exercised. But I would collect it much less premium than for 70 puts. And in fact, I want to be exercised.
Right.
If I will not be exercised, okay, I will make $7,600. That's nice, but that's not my objective. In fact, I wish
I
to
understand.
be exercised, right?
Yeah, I've learned that from you. Yes.
Mm.
I understand that now.
Yeah, but look, it's either way. It's the strategy works, especially with the stocks that you would like to acquire anyway.
Right.
So the only reason that I do that, instead of at the time when I did it, the stock was $67, and I sold 70 puts. So I was bullish on the stock. That's why I sold 70 in order to collect more premium. But also that more premium, extra premiums that I've collected allows me to, if that will happen, to acquire stock at a much lower price than when it's trading now. Gwen, how do you understand the strategy?
I understand that. Can you hear me? I think I have an echo. Okay. Understanding that if there's a stock that you know it's quite stable, and you don't want to pay the current price rate on it, you will do a put for it to acquire. Then you can acquire it for a smaller rate or a lower rate that you would then be able to leverage on the long run.
Also, that strategy correlates with what I've always said. Number one is the preservation of capital. Same as number two, number three. But there is also, remember that sometimes I've argued with Shaquille about the strategy of selling options versus buying options. However, the disagreement is quite artificial because um, we have, because of his position as a professional fund manager, he's using options differently than I do because he's doing a lot of spreads, and part of the spread sometimes is selling. Now, is buying and selling. Now, I do buying and selling as well. For example, I do that. Right now, I'm following the stock Kostka. The symbol is cost. Uh, I believe that the stock, although it's not cheap, it's $340 a share. However, I believe that their earnings result will be positive because I'm basing on what's happened with Walmart's earning report yesterday. Target did report today, and I believe that Costco is just as good as these two companies, and they will do very good reports. So most likely, the stock will go higher. So what I could do, I could sell. It's mind you, it's very aggressive strategy. I'm planning to sell 345 puts, but as the insurance, I will buy also maybe 310 puts. But on that spread, the premium collected will be way more than otherwise. So this way, again, if I will not be exercised, let's say Costco will go to 345 and higher, I will not be exercised. But then I've collected premium on puts that I've sold. Also, why I bought puts, I bought it as a protection in case of maybe negative report or market will crash or something else. So I know that I can lose only set amount of money. Because if you don't have that protection, then you can really have a great loss. Yeah, yeah, you're short and your wife's short and many other things. So you don't want to be in that situation. So you always set up the parameters of what is allowable loss on a single position you can incur. Um, Now, if I want to be exercised, another strategy is, let's say stock is 340, I can probably sell say 340 puts. But in this situation, I will do only one or two. You see, if I have protection, I can do 5 or even 10 puts. Remember, stock is expensive. So if you're exercised, you're looking at 100 shares, you're looking at tens of thousands of dollars that you will be exercised. But that's okay. A quality stock like that. But remember, the cost doesn't pay good dividends, unfortunately. So you don't want to be a long-term holder of Costco. I do trade Costco from time to time. I love the company, but I cannot be long-term holder of Costco, unfortunately. So each stock, see, each stock is unique, and you have to. There is no rule that works 100% all the time at any stock. It's every stock requires a strategy, and you have to think ahead a few moves, like in chess. So you have to understand what's happened in this case, what's happened in this case, what's happened if the stock will run up to $350, which is very possible. What's happened if stock will reverse and go down to $325 or even $310. So you always have to play all these scenarios, and even that you have a certain parameters where you anticipate stock will move, but it doesn't mean that you're right. You can just as well wrong. So you have to always plan different strategies all the time. Jim, are you doing that type of strategy?
Yes, I I am, but I did want to contribute an idea to new investors. I assume that what I did when I was young. I didn't have a lot of money, and I was going to college, so I worked as a dishwasher. I did odd jobs in order to make some spending money. And but when I got out of college, I got employed by AT&T. Now AT&T at the time was a phenomenal company, and one of the things that they did was they matched your payment. So if you set aside in AT&T stock a certain amount of your paycheck, they would match it up to 6%.
Fabulous.
So it was fabulous. And now I was in my early 20s and my spending habits weren't exactly disciplined at that time. But this was taken out of my paycheck before I got the money. If I got the money, I would have blown it. But this was invested in AT&T stock, matched by 6% by the company. And so I never saw that money. And it just kept growing and growing and growing. Now, if I had gone to a different company and its stock went down, maybe I would have had a different experience. But I think having them match 6% of what I put in, even if the company didn't grow, I was still getting 6%. So,
Yeah, that's a great arrangement. I think a lot of big companies have stock plans for employees.
exactly.
And so was an Apple and many other companies.
Exactly.
I even remember the stories about Apple employees, who are doing just manual jobs, like cleaning the floors, for example. And after so many years, whoever person cleaned the floors was a multimillionaire because of their stock. And they still continue to do the same job, believe it or
Yeah.
not.
Yeah, but there's another approach to get into the market, especially if your company has a matching plan. I truly tell you to max out whatever you can in
Absolutely.
that company.
No, that's a very wise decision, and I'm glad it worked for you. Another idea is I've read it in many investment books about whenever your paycheck is, take 10% to yourself
Yeah.
and never touch this money. So you are playing only with 90%. You have to pay rent, you have to buy food, you have to do whatever you need to do. But 10% are untouched, regardless of what. So you buy less food, you don't pay rent on time, you'll pay it next time or whatever. But 10% is untouchable money. So this way you can very quickly accumulate. I don't want to go as far as I usually do to suggest people stop paying rent and stop paying credit card debts and everything else. Okay, I will not do that. It's not really advice. It's a strategy of certain people, and it well could be that those people who are not paying rent and are facing eviction or so on. Who knows? Some of these people may do it on purpose. You never know. But
Don't try that at home.
yeah, yeah. Don't do that. I've never done that in my life. I always considered that it will come to that, and I just was lazy. I was thinking about that as a possible strategy and very advantageous strategy. But I thought that okay, I'll do it in 6 months, maybe in 12 months or so on. And it never came to it. Unfortunately, it never came to it because it would be interesting to try on yourself something what
You recommend to others, but not yourself.
exactly.
You guys know what's interesting is that in the South, people say you need to save 10% to give to the church every Sunday.
Oh, well, that's true.
Which church?
Any church that they go to. The
What if
church
there are
wants
several churches?
the only
So
church that they go to.
But you see, here's the problem. You will give it only to one church of your choice. But there are other churches that you will not give anything. So this is unfair. Why you are supporting one church, but you are not supporting other churches. So in fact, you can have a lot of enemies by doing that. So I would prefer not to give money to any church.
Yeah, but the concept is called tithing. I don't know if you know that term, Sasha, but tithing is something that's expected of you if you're a church member of a certain church, and that's a lot of different churches that still have something like that. So 10% is a normal ask from the church to you, and they call it tithing. And they think that they're doing good for not only the church but for the whatever faith they follow. For the faith. So
I would also be interested, before I would do 10% to the church, to ask them use of proceeds. What are they planning to do with this 10%?
yeah,
Because let's see if somebody drives a GM truck and he wants to upgrade to a Cadillac of latest model, or maybe Mercedes 550. So,
Well,
of
Sasha,
course,
if you were a member of one of these churches, you would be on what they call the Council of Elders. And the Council of Elders asks those questions.
oh,
So,
I see. I see. Okay. So my questions are not original after all. Yeah. Okay. So let's imagine that instead of
Hold on for a second. Let's
yes.
welcome somebody to the show.
oh, good.
Our gentleman from Australia just popped in, so let me say hi.
Good morning,
Oh,
everybody. Good
Love your
afternoon.
so
shirt.
how are you, Shaquille?
I'm good. I'm good. But one of those days we're just having some internet issues, unfortunately. So
Oh, sorry to hear
yeah,
that.
Mm.
I
That's
thought
okay.
I down my shirt for you, Shaquille. This is not clear. This is clearly not blue.
and I know that you've caught me now. I've worn the same shirt on ibmtv twice in a row.
Remember there was a movie. The Fly. I don't know if you like this
Oh, yeah.
movie, but I remember there was a moment when he was about to go to work, and so he opens his door, and there are seven exactly the same coats. And he says they're all the same color, they're all the same, so I don't have to make any everyday decisions
Yes.
which one to wear. They're all the same.
Yes.
So whatever he'll pick up, he'll just wear it.
And I have 7 shirts for IBM TV, and I have to do what Shaquille just did. I have to avoid doing that, of wearing the same shirt on the same show. So that's the only thing I have to worry about.
The problem is that Jim and I have this unspoken thing where we're sort of competing on colourful shirts. So
Yes.
I see.
The question is, are you wearing the same pants?
well,
Chef, you have the
Very-
perfect face on right now.
Actually, since you are doing all those appearances on IBM TV, actually you might as well sell all your pens because you don't need them.
that's right. You only see me from here up, and I'm at home. So it's okay. Why wear pants at home?
Well, okay, Shaki, let me get you up to the speed. We are discussing today's market, what's interesting, where the money should go. We discussed a little bit of Tesla stock, and we all consider it to be a little bit risky at this moment, although it may go way much higher. Some people suggest that it will go easily to 2,500 a share. And if it will go to 2,500 a share, why cannot go to 3,500 a share or 5,000 a share? I mean, there is no limit how high Tesla may go. It may drop down from, what is it, the 1,900 now. It can go easily down to 1,450 or retraction, how we call it, right? So that the retraction can be crucial for a lot of, especially new investors who believe that the stock going only one direction, which is higher. And that's true for this market because instead of earning 1% on CDs, people almost forced to invest. And a lot of people are looking for something to make a killing on the market, and Tesla stock is one of those. But you always have to consider that there are some pitfalls. And no one stock in history went only in one direction, higher. There is always a moment when direction can actually become an opposite from one going higher. I don't think that, Shaquille, you have any position in Tesla, do you?
Not the last time I checked. Not my personal accounts, no. No doubt some of the others there would be, but we obviously have to take the entire basket of securities. So, but Tesla specifically, I mean, look at its price.
Yeah.
I don't know. Although it's not a tech stock, I kind of view it like that. Like there was no way Google would ever have a $1 trillion valuation, or Amazon. A little company that sells books through the mail. Like that company is one day going to have $1 trillion valuation, $1 trillion. It's just not possible. Well, more for me. But I mean, some of these valuations, though, I just don't get. I mean, like when Facebook came out, when it had its IPO, and I shorted it actually.
And you were right.
and I was right. And then I just went, why am I doing this? I don't understand tech in the first place. I should just get out. And thank goodness I did, because it just went up and up and up. And I'm sitting there going, huh? And to me, look, I don't know, but it's like I've only just kind of learned my way around Facebook now, but other people, are using it still. And a lot of other people, and like younger people that I talk to, will say to me, oh, I'm kind of using Instagram, or I'm kind of using, I know Instagram's owned by Facebook, but I'm using this, or I'm using Twitter, or I'm using these other medias, and they're not using Facebook as much. But yet Facebook just seems to like keep going up and up. And I kind of think, like, I don't get it. I don't understand. But when they had the IPO, 100 times earnings was their IPO price. And I thought, like, Goldman Sachs, are you guys crazy? I know you're crazy, but like, are you like super crazy today? Like, what's happening? So, look, some of the valuations I don't understand. This market's a little bit different, though. I mean, for years, when we had the Great Recession, everyone was talking about gold. Gold's going to go past 2,000. I'm like, it's not going to go past 2,000. It doesn't cost that much more to mine the gold during a downturn in the market or a black swan event. So why would gold go through to like 2,000? That's crazy. Well, December contracts hit almost 2,100. So people are kind of saying those same figures about gold, aren't they? You're hearing them say, look, gold could easily get to 2,500. Hey, it could go to 35. It could go to 5,000 an ounce. And I'm thinking, can it? Well, I don't know. Right at the moment, we're in a position where anything could happen, and it could go anywhere. And a lot of this, I think, has to do with the Fed just coming in and like pumping money into the market. And so as a result, you've got interest rates that are low, and although the US has been very careful, and I believe the Fed will keep intervening to make sure that interest rates in the US do not ever turn negative, because once you've done it, you can't ever say that we never went negative. But in real terms, it is a negative proposition because of the rate of inflation.
Yeah.
But you've got this huge pump of money coming in, and I think it was David K. Johnson that said it. It might have been you, Jim, who said it on Monday night, that when people talk about supply side economics and sort of trickle down, the trickle down kind of theory, clearly that's not working out too well at the moment, because there is a huge supply of money, because the US Fed is just creating massive amounts of money. So too is the ECB, and many other central banks.
Oh, sure.
But you're not seeing the results at the bottom. You are actually, but you're not. I don't know if you're necessarily seeing results at the top either. You're seeing the stock market go up, plus the price of gold. It's only just been the last couple of weeks that you've started to see yields go up and treasury bonds fall slightly, and it's only been really quite slightly. You're still at record highs. So the breakdowns that the breakdown between various instruments just doesn't seem to be there at the moment, and so it's an interesting time. I try to sort of put some bets on and hedge my risk, so I'm not exposed too much if I get it wrong, because I think somebody smarter than me can try and work this market out, because I can't.
Yeah, we're living a very interesting time when all the usual correlations between the interest rates and
Yes.
gold and stock prices and whatever is there.
That doesn't work.
In fact, experienced traders may have more problems than not so experienced, simply because they have certain models which were right for the last 30, 40 years, and all of a sudden today, they're no longer working for them. So they have to very quickly adapt to new realities. And some people are successful to do so. Some people may not be so successful. You can even see that returns of Warren Buffett's stock, Berkshire Hathaway, is not doing as well as a lot of other funds, hedge funds including, and many others, simply because they have a certain preconditioned notions of sound investing, buy and hold investing, and value investing, and all this stuff. And that may not be the best strategy in these times like this. So this, I would qualify more or less what we have now is a trader's market. I don't believe that buy and hold strategy works anymore. It's a trading situation. You have to value every investment situation on its own. whether you gonna. I think still the best thing if you're trading stocks is to um, specialize in a handful of stocks. It could be three, four stocks, and study them, see the patterns, learn about the companies, and trade a little bit here and there using options, sometimes buy, and just survive through your diligent work. Otherwise, you might, yeah.
Sasha, I agree with you completely. I think that's tremendously wise advice because I took graduate level economics courses in school and they didn't teach me for these times. Nothing they told me makes sense
It's
today.
not just you, Jim. It's all of us.
Yeah.
Nobody taught us anything. We have to learn from the market as it happens. Every day you learn something new. And you see, for example, one of the stocks what I'm following is NVIDIA. NVIDIA will have earnings report later on today. I did a couple of trades today in NVIDIA, of course, using options. So what I did when stock opened down for some reason, and they have normally they have fantastic surprised on earnings reports. So when they went down in the morning, I bought a few calls, and when Nvidia obviously recovered and started to go higher, and I sold all of them. You know why? Because first of all, I wanted to um, get the profit, not just paper profit, but the real profit. And second of all, I'm still a little bit scared of earnings report. Not that they will have a lousy report, I don't believe so. But what happened is, remember Microsoft a few weeks ago? They had fabulous report. They beat the top line and bottom line and just everything what's possible. And the stock went down because people expected even more. Or there are just too many speculators who are buying Microsoft on the earnings report, and when it didn't materialize, what they have to do? Sell. Nothing else. So they're selling, and market makers are walk away. They don't provide any bids. So Microsoft is going down 5, maybe even 10 points on nothing, on a very, very positive earnings report. Is it what's going to happen today with NVIDIA? I'm not sure, but I'm not there anymore. uh, Jim, are you playing sometimes?
But you did make your money, so you're good, right?
Yes, I made my money, but look,
You,
I can make probably much more money if I would stay, and the positive earnings report would be good, and the stock can go from what is it, 490 now. It can go easily to 510, maybe even more, but it can collapse down to 450 just as well. So, what can you do in this situation?
exactly.
Yeah. So the rules are it's a trading market, in my opinion. So when people may accuse me that I'm not investor, I'm a trader, and I say, well, it's you can call it anything you want. Your objective is a preservation of capital and make a little bit more than 1%.
I think it's interesting to say that you should specialize in 3 or 4 stocks and that sort of stuff. I mean, look, for me, some of the really easy money that I've been making, again, just on my personal account, it's just looking at the big 4 banks. So in Australia, we've got like 4 main banks. There are some smaller ones, but the 4 main ones are sort of
In Canada, it's 5.
in the case, yes, that's the same here. But you've got a little bit more of a population than us,
Yeah.
so we watch. I just watch those, and it's in my time zone, and I kind of know them pretty well, so I kind of have a pretty good feel for where they are, and so it's kind of easy money, and it's been something that I can kind of just sit along, and it's not too hard to put a trade on, put my orders on as to where to exit, and just let it go. And then there's other stocks that you just know, or you kind of hear about. And I think it's good to do that, kind of stick to the stuff that you know pretty well. So one of the stocks that I'm looking at the moment, and again, this is not financial advice for any of our viewers, but there's a company in Australia called Treasury Wine Estates. You guys probably have never heard of them, but you may know some of their brands, like Penfolds is one of the premier wine brands that we export. I think you guys get some of our top Penfolds over in the US. And some of the others that you may be used to as well, some of the other big Australian brands are actually owned by this company. So they own most of the big stuff in Australia. I happen to be quite a fan of nice red wine, so it's always a company I've looked at and gone, man, I wish I actually owned the whole thing, And it really kind of got that from Warren Buffett. You shouldn't buy shares in a company that you wouldn't want to actually own the whole company. So, yeah, I mean, what's happened is we've actually experienced a problem with actually not just because of coronavirus, but actually some of it as sort of headwinds or tailwinds, I should say, from the trade war, which people have almost forgotten about now, that happened with Donald Trump and China. And Australia is obviously a big trading partner of China's as well. They buy a lot of our exports, agricultural exports, especially our iron ore and our other minerals. So when China slows down, or when China, has a bad economic event, that can affect Australia quite dramatically. But also, Australia has sort of sided a little bit with Donald Trump on the, we want to, we're going to blame the WHO for the coronavirus. We're going to blame China for it. You guys should have done a better job. And as a result, China has kind of, turned around and said, oh, well, we might just put a 30% tariff on your meat products that are coming in, and how about a 47% tariff on your wine and that sort of stuff. And that's actually caused Treasury wine estates to drop by about 20% from their in their share price just the last few days. So, to me, that looks like a company that I think has good fundamentals. So, you look at a company like that and say, well, is this a company that I think might bounce back? I think you see a lot of those opportunities in the US as well, where you're seeing companies that have gone to really, really low prices, and you think, well, can they recover? Will they be able to recover from the slowdown in the economy, or slowdown in their sales, because of the coronavirus?
Mm-hmm. Actually, I'm considering the bet on General Motors. Not that I'm too impressed with this company, not at all, but there is a demand on cars in the United States, because a lot of people in this situation, of course, will not consider using the usual transportation like buses and subways or so on. They want to have individual mode of transportation, which U.S. Historically was found on, and all the infrastructure of the U.S. is based on the individual auto transport. So GM is now they're also moving to electric vehicles heavily, but furthermore, they have unparalleled distribution channel. They have dealership almost on every corner, and so on. So it's just a matter of convenience for people. They just need an average mode of transportation, so they would probably buy General Motors. Now, considering that, I looked at their prices and some financial information. Maybe it makes sense. It's they're around like $30 a share, so I would think that because GM is also part of S&P 500 and Dow Jones and everywhere, so as the market moves along, so GM, even if not being a brilliant company, they will just move along with the market simply because index funds and pension funds are so they will just simply have to buy GM, even if they hate the company and their cars, they will just know where to go to buy their stock. So if that will happen, the inflow of money will continue and the stock may go higher. Not much higher, but a little bit higher. So I'm considering maybe selling puts, maybe $30 puts, collect some premiums. And if I will be exercised, I will get their stock somewhat cheaper. And if not, I will just keep the premium. So I'm looking at this strategy. I will not put a lot of money into that for sure, but just as a trading situation, maybe it makes sense. What do you think, Shakur?
Sasha, I will have to tell you that as an Australian, I can make no comment on GM whatsoever on an international broadcast, because GM is very, very unpopular in Australia at the moment. Everybody, I think, uniformly, even if they were Ford supporters, everybody is really, really upset with General Motors. So maybe we could have a look at Ford stock and do the same thing there. In Australia, just a little bit of tidbit of information for you. So in Australia, we've really got the two sort of iconic Australian cars, being the Ford Falcon and the Holden Commodore. Holden was
I didn't know that.
problem with Ford versus GM. You know what? I remember
Yeah.
several years ago, GM sold all their operations in Europe. They just don't produce and don't sell cars in Europe.
Well,
However,
that's what they've done here. So we've got the Holden Commodore, which is the iconic Australian car, and originally was made here and built here, right here in Australia. And then GM came in and bought them, and then some of the jobs went overseas. But what they actually did was they've shut Holden down altogether. They're not even going to sell them anymore. So we've just lost this iconic car in Australia, and all like Australians are like, "What? Like, what do you mean? That's our Holden. That's our national brand. It's like taking Vegemite from us." Thankfully you guys won't take it because you don't like our Vegemite, but but like you can't do that. But you're right, and this is a very interesting thing in the motor vehicle sector, is you have seen a lot of consolidation. I think does BMW now own Bentley, for example, and like you see all these big, massive kind of things. One of the things that I'd be very interested to see is, because of how much we currently have happening in the market, and because of these big market valuations, are we going to start seeing companies, not because of, say, antitrust rules, but just because they choose to do it? Are you going to start seeing companies split off divisions and then set up other companies? Yes. Because this is a thing that a lot of people often don't see, is that they think that mergers and acquisitions is really where a lot of money is made. And they're right. There is a lot of money made for the insiders that are doing it. But there's also a lot of money being made when you come in and you actually separate out a company. Right?
So Gecko strategy.
Yeah. Shaquille, I wanted to mention when I mentioned that General Motors sold all its operation in Europe, Ford didn't. It still has operation in Europe. And guess what's happened? According to a European Commission on cars, a certain amount of cars that companies producing must be electric cars. So Ford is now struggling to produce whatever electric cars they can to apply to these regulations. And Ford doesn't happen to have a lot of good cars, electric cars. So therefore, the situation of GM is somewhat more promising, I would say, than Ford because of this electric car issue. However, what General Motors is trying to do now to make a domestic electric cars. They had experience with Volt. It wasn't a failure, but it didn't catch either. So now they're planning to have a little bit more, to put more attention to producing of electric vehicles or so on. So anyway, it's a purely trading situation. I would not recommend anybody to hold GM for a long haul. I may regret my words if GM will go from $30 to $85, and people will say, "Oh my God, what a fool he is!" He just
that's the risk we all run whenever.
Yeah. That's why it's so tough to predict. Now, again, Shaquille, with what you previously said is making good case for gold, simply because of this new debts will be issued, and nobody knows even the extent to which. Actually, I was thinking if Trump really wants to get reelected, and trust me, he really wants it. I don't understand what's the difference between what is it now, $28 trillion worth of debts, and 32 trillions and 45 trillions. What's the difference, really? I mean, nobody will ever pay it back.
Don't give Trump ideas. You're going to sort of see the White House starting to be like covered in gold. I can see the election slogan. You'd be like, look, California is red because look at all the money that's spent on the White House now. It'll go to waste if you don't vote him back in. I can see it.
I can't unsee it.
The thing, I just think the prices are so irrational. And I was actually working as a dealer at the time when gold was getting up around this sort of 1700, 1800 mark. And I just went, this is ridiculous. This is absolutely absurd. I'm shorting gold. And everybody else had gone long. And thankfully for me, I got that one right. I think it fell all the way down to like 1200, 1300, something like that. Right. I didn't get out at the bottom, but I did make a pretty nice profit on that trade. But yeah, I mean, look, I'll tell you, I was actually short gold this time round. I got short gold at 1690 and got out at 1650 because the market was. I'd made a bit of profit. I just went, this market is just absurd. And thankfully for me, I actually had other trades on, because when gold hit 1800 and then went to 1850, I was like, I might start thinking about shorting gold again. And thankfully for me, I didn't have enough margin left because I'd put all these other stocks on, because all these other positions on, because it just kept going. As I said, December futures hit almost 2100. And it proved wrong, actually, something that I've been saying for a long time. I'd been saying for a very long time to people that I couldn't see gold getting past the 2000 mark without a heap of inflation. That's the other thing that's a real concern in this market, is that when the market has gone up, and Jim, you've said a few times, there is a real difference between the economy and the market, but the market is often considered a gauge of the overall economy. So when the market is going up and there's more cash around, you tend to see more inflation, you tend to see more spending and that sort of stuff. But obviously, at the moment, people can't really spend a lot of money. But you can't go out to restaurants, you can't do all these things. So that makes it kind of a tough situation to not just navigate, but also to predict as a market analyst, or somebody who's on an investment committee, running a pension fund, or any of those guys that do this professionally. It's very, very tough to predict this market.
All the old rules are out the window. Do you guys remember Ross Perot? Does he ring a bell for any of you? Ross Perot? He was a third-party candidate for presidency 30 years ago or something like that. And one of his pitches, yeah, there's a lot we remember about Ross Perot, if you remember. But one of his pitches was, how can a company like GM be in the shape it's in? It's fundamental to America. And, so we have to shore up companies like GM because they are American icons. And he pitched this, but he's thinking the old rules. GM, it's the old idea that what was good for the GM was good for the country, and that's old ways of thinking. And we have to have new ways of thinking because the old rules no longer apply, as you're pointing out.
Yeah, exactly. So all these international companies, Microsoft, Apple, they're well financed. They had great business models. They're making more and more money. Another issue is that they keep their money offshore. They don't pay taxes. But
Yes.
that's a different story. I mean, the companies are great, and they will continue to be even better and better and better. And there might be changes in U.S. Taxation laws that could require them, at least occasionally, pay a little bit of money and bring some of their cash in the United States. But they're talking about it for the last 15 years, and nothing changed. So I don't expect that to be changed anytime soon. So their stock will go higher and higher and higher and higher. So that was one of my talk when I argued with Nick on this show, when Nick was saying that the US is such a rich country, it's such a strong country, and so on. And I was saying, I don't think so, Nick. I think it's a handful of companies who are very rich and very strong, those that I just mentioned, and a few more. About, as you know, 6 companies, Google and those companies that I mentioned before. They together have a 24% of capitalization of S&P 500. So can you imagine 6 companies are 24%? So the other 494 companies are only 74, 76%, right? So that's a fact, and they will become even richer, and so same companies like Walmart and Target and Costco and others. People are crying about that these companies are destroying mom and pop businesses and so on. But what can you do if they're providing great products at great prices, great distribution, great feel that even when you walk to the store, and who would care about going to mom and pop store when you have inferior products at higher prices and so on? So what's the way of dealing with that? It's a very, very serious problems. On one hand, we have to save small businesses and help them any way we can, and so on. But if they are doomed, should we help them? What should
Throwing good money after bad? Yeah. We
I
don't
don't
want to
know.
throw good
I don't
money after
know.
bad. But I wanted to say what Chuck mentions, that you usually use the Dow as a gauge for the economy. And that's one of the old ways of thinking, because that's not a reflection of reality today. And that's what we have to teach people, because the old way of thinking was you track the stock market and that gave you a general idea about how the economy was doing. And that's not what's happening now. These few companies are getting more and more wealth, and it's not trickling down, believe me. So these old ways of thinking have got to be rethought. And the stock market is not the gauge for the economy, no longer.
I agree with you, Jim.
I think it can be a gauge without being the whole gauge, and that's where, to get in front of the curve, and I'm not talking about the coronavirus curve, guys, but to get in front of the curve, it helps to actually have a feel for what's actually going on the ground. I mean, in my trips to the United States, I've learned a lot about the country, not just a little bit more about its politics and its people, but also about its economy. Because there would be certain things that, as an Australian looking at the country, I go, huh? Because there's just certain things that we just didn't quite understand, and small things like your eggs are white. I'm sitting there going, what's wrong with their eggs? Because we don't get white eggs over here. Do you know what I mean? The shells aren't white, so I'm like, what have they done to their eggs? So, but you just get more of a feel for for the country and for what's going on. But look, I think personally, I actually do think, regardless of the election, actually, whoever wins over there in the United States, and we've got elections coming up as well, in other countries. There are other countries in the world, they've got elections coming up at some point. Again, even in those countries, I think that whoever wins is going to be irrelevant, really, for some part of this, because it's kind of bigger than just politics. I mean, politicians have to make some decisions about closing borders and shutdowns and all that sort of stuff. But once COVID's over, and it'll end eventually, right? We're not going to be like, this is not the end. Like, it's not where the human story, ends. In 20 years, our children and grandchildren will be like, oh, what was that like? They'll be through that catastrophe. They'll be moving
dealing with their own pandemic.
Yeah, that's right. So, but no, they've got 100 years, right? It's only every 100 years. Come on now.
Well, it's accelerating. Everything is accelerating.
But yeah, so
that's old thinking, Shaq.
I think, but I think like when people can finally go out, I think people are going to just go out. They're like, oh, cool, I can go to my favorite restaurant. I can go and do stuff, and so I think you're actually going to see sort of almost like an overcompensation, where people are like spending a heap of money. We've actually seen that here. I know that gambling in the United States is a little bit more difficult, and in Canada. It's a little bit more difficult to kind of do, and online gambling and all that's sort of controversial. But
it's doing okay.
Yeah, but your odds are terrible when you don't have Betfair. So, but I can only say that from a Vancouver perspective. I'm not sure about
Aussies and Canada are supposed to get along. Come on.
But yeah, in like online gambling and stuff like that is obviously something done so much more in Australia and so much more in the UK, and we've actually seen a lot of people that are gambling. And actually, if you look at greyhound racing in Australia, there was an article that came out probably 2 or 3 weeks ago showing that they actually had the highest turnover on bets on the greyhound racing industry in 1 week ever recorded in history.
But
and
yeah, I've got to tell you that no matter who wins the election, Microsoft will be fine, Amazon will be fine, Apple will be fine, but the guy on the street who's suffering right now might not be fine. And it might depend on the outcome of the election, how they do. So the companies that make up these DAOs that we no longer should pay attention to, they are going to be fine. No worries. Trump wins, Biden wins, they don't care.
By the way, there is a gambling site which accepts bids on U.S. election, and there is one bet which pays 5,000 to 1. I've invested $10. The bet is the bet is that on February 1st, 2021, Trump will be in Russia.
I'd pay $10. I'd,
5,000 to 1.
yeah, that's worth $10.
It's
Yeah,
a good investment in my opinion. The last
Well,
time, the
He won't
last
be in the
time I
United
looked,
States.
sorry,
Maybe
the
he'll
last
be-
time I looked at it, it's already 4,500 to 1.
maybe he'll be in China because maybe this whole
North
Chinese,
Korea.
that North Korea as well, but maybe the whole spat between China and America was really a cover, and behind the scenes they were conspiring. No, I wouldn't say that. Don't say that about Donald Trump. Be nice, Jim. He's the president. You're supposed to pray for your leaders.
Oh yeah, right. He's no longer my king.
And he became very unpopular in Canada, by the way, because he put a new tariffs on Canadian aluminium production, another 10% extra. So on.
Toronto should have a vote.
Canada is preparing retaliation against him, but then they were advised to wait until November election, and maybe they don't need retaliation in this case.
Well, these trade wars are old thinking. There's no sense in trade wars anymore.
The coronavirus has been interesting because I think that any person anywhere in the world really has to stand in awe of a man that was actually able to annoy and upset so many countries in such a short space of time. Like normally you might upset one country, maybe two,
Right.
but to upset as many as he did. So here in Australia, that we had the Trans-Pacific, I think it was called the Trans-Pacific Partnership or something, and
Yes.
technically the US and the Pacific because of not just Hawaii but also the West Coast, obviously, California and some of the rest of the West Coast states. So he's like changed all these rules. And look, to be fair to the man, some of them from an American's perspective did make sense. But one of the concerns I would have is that whenever you become too protectionist, you get some short-term results, and it's a feel-good thing for the short term, but it's not a feel-good thing for the long term. And this is a really interesting thing because normally, historically, it's the right party, if we're going to go left or right, it's normally the right party saying that to the left. It's normally, historically, it's been the right saying, look, you can do this, but that's only going to be a short-term thing. And all of a sudden you've got, in America, again, the whole thing is just sort of flipped on its head because you've actually got the left party going there, the left, in quotation marks, saying, actually, that particular economic policy, that's only going to work in the short term. You're going to have a big bounce, and then what are you going to do? It won't be sustainable. So it's kind of an interesting dynamic. I just wanted to very quickly say, Jim, you talked about how the markets aren't working the way that they would normally would. I don't want to bore our viewers with anything too complex, but there's a thing called the yield curve, and people who trade the yield curve are basically trading the differential between interest rates across different time periods, say the 2 years and the 5 years and the 10, 15, 20, 25, 30, and they can plot out the differences in the yield, and that creates a curve. And you guys might remember that a couple of years ago, it feels like a lifetime ago now, that they were complaining about, is the Fed going to deliberately invert the yield curve because the Fed was raising interest rates and might have raised them a little bit too quickly, and they actually brought them down a little bit. And they were trying to offload stuff off their balance sheet that they still had there from the Great Recession. And the yield curve inverted like multiple times. It inverted and then came back up and inverted and came back up. And that happened multiple times. And people were saying, pretty much every time that happens, there's going to be a recession. And people were saying around the financial circles, certainly in Australia and in Europe, I think this time's going to be a little bit different. And I've put my hand up. I was right there as one of those people saying, yeah, look, I know it's inverting, but there's not going to be a recession coming in 2020 because, what could go wrong at the moment? Everything's going fantastic. Unemployment's really low in the United States. Unemployment's really low in Australia. The Europeans are doing well. They've got some high debt levels in Europe, but, things are going along pretty well. The economy's bouncing around pretty well. What could go wrong? And I don't think anybody saw this. So that's an interesting thing because that was one thing that normally is a predictor of a recession or a massive downturn in the market. And for reasons that are not entirely economic, we've seen that huge drop in the US market, and that's been felt around the world. So
yeah, and Shaq, there's no Nobel Prize for annoying countries. Really. We got to tip our hat that he's been able to do it, but you don't get an award for that. And I think that you're absolutely right. We had this protectionist, isolationist attitude in the 1930s in the United States as well. And World War II got it out of us and got us productive again. Isolationism and protectionism are proven losers in the long run.
Yeah, absolutely. Look, I mean, I think the argument for lower taxes and for less regulations in some areas can help, but then Sasha, you made mention before about could they use some sort of mechanism for the taxation mechanism or something to get companies to bring money in from overseas. I believe Obama temporarily said to companies, okay, if you repatriate the money that you have overseas to Australia, we'll give you a to Australia, sorry.
You wanted it.
There you go, look, say I tried. It was sorry. It was NLP. I just had to sort of throw it in there. Come on, we've got a $1.5 trillion economy. We need some help over here.
You were making a good point, though, so keep going.
If you repatriate some of that money that you have overseas and bring it back to the United States of America, then we're only going to give you like a 5% tax rate or a 3% tax rate. It was something very, very low. I can't remember exactly what it was, but it was very low. Right. And those companies that did that, and then paid all their directors and executives big bonuses and all the rest. The general worker didn't get very much out of it, and neither actually did many of the shareholders. The shareholders didn't see a buoyant share price as a result of this money coming back. And really, this happened at the Great Recession as well, when the banks got all those big bailouts and companies like GM and AIG and all those big companies that were really struggling. I mean, look, if Enron had been around during the Great Recession, it wouldn't have mattered how bad their accounting was and how bad all of the stuff was. Enron would have survived it easily if they had given a bailout. Yeah, they would have got a bailout, exactly. So, and what happened to that money? Did it go down to the shareholders? No. Did it go to the customers? No. Did it go to the workers? Absolutely not. It generally just went as big bonuses to the company executives. Now, again, in all fairness, the banks paid it all back, but I don't know.
Let's get back to your point. Your point was like, we don't want to bail out bad companies. We don't want to bail out even bad small businesses. We don't want to throw good money after bad. So what are we going to do? That's correct. That's directed at you, Sasha. What are we going to do? We don't want to throw this money at bad businesses that should fail.
Okay, let me give you another example. On Monday, we discussed new homes, right?
Yeah.
Remember
Right.
that all people who will be evicted because they didn't pay rent or so on, they will be moving into new homes, which is a wonderful idea. What the idea that I love about homes, so to speak, is that essentially it's modernizing the infrastructure. They're getting very modern, good accommodation and affordable and so on. But what's happened if people who don't pay rent in their old apartments will not pay rent in the homes, so to speak, right? So what's the remedies then? What's the changes there are? I see very little changes. In fact, if they're unable to pay rent in their old homes, how they will be able to pay rent in their new homes? And that's a question of questions. I don't know how to deal with that. What do you think, Shaquille?
I think everything from like homes are definitely something that I think will be needed, not just in the United States but around the world, because there's so many people that are going to look.
Canada will need a lot of new homes for people who will move from United States to Canada, and we need a lot of housing to accommodate these people.
Yeah, of course. I don't think that people. It's just my opinion. It's relatively easy to get into Canada if you come from a Western country. Australia has a special relationship with Canada, so for those of you on the West Coast who ever go to Vancouver, there's a beautiful ski resort up there, very close to my family's heart. There's one of our family members up who died there. Whistler, but the sort of slang term for Whistler is Australia, because like every Australian that goes overseas just ends up in Whistler. So that's sort of the slang term for it. But we here in Australia can get like I think if you're under 30, you can get. I tried to lie, but they didn't believe me when I found out about this. You get like
you need more facial lotion. That's all.
Yeah, some of Lynn's anti-wrinkle stuff is what we need.
That's right.
But you can get like a 4-year working visa. Something I wish I had have done when I was younger, to be honest, is travel on a working visa around the world, and then you can kind of renew it, and you kind of then just become Canadian, because they're like, we've got this big country, and like, just stay, like, it's okay just to stay here. So Canada's kind of cool like that. But I tend to think that the people that are going to move up there are probably going to want, the big McMansion kind of house that everybody's been after. I mean, like Australians want that big McMansion stuff as well. We're like, Americans have got it. We want that over here. So I don't know. I think it's a good solution for the people that are going without. But then economically, it's just never made sense to me economically when you see whole suburbs of just vacant, empty houses that aren't being maintained and are just rotting away, and then you've got all these homeless people that are sitting there in the cities, sleeping in cardboard boxes. I just don't get it. Like, it just seems like such bad management. And I'm not, whoever's in charge of that, it's just bad management. It shouldn't happen. And it doesn't just happen in Democrat cities, as the Republicans and the right would claim. It happens in the Republican cities as well. Right, so it's just bad management all round by the political class, in my opinion. To get back to the economic issue there, though, this will be a really big question, because Canada will obviously reach a limit of how many Americans it's going to take, and it'll be great for Canada, really, if Trump wins, because I think there's going to be a lot of upset people who are very close to Canada, right? I mean, most of the northern states and certainly the West Coast states are quite strongly Democrat states, and Canada tends to lean a little left politically to most of the United States. So I think they're going to go up in droves, and then Canada's going to go, we're going to shut that southern border, because they're all going to be up there. People that can afford to do that are going to be the most sort of mobile and upwardly mobile, and probably a little bit wealthier. So this is actually potentially problematic for Canada, though, in a different kind of way. During the Great Recession, getting back to my favourite place over there, Australia, during the Great Recession, you saw a lot of the cabins and chalets and stuff fell dramatically in price. We were talking about buying one here in Australia because the Australian dollar was quite high at the time. A lot of Americans had gone up and bought property up there. What we've actually seen in Canada, especially in Vancouver, and we've seen this in Australia, is a complaint that a lot of the Asian markets have come in and bought up our real estate and have sort of artificially almost pushed up the price of the real estate, and they're not renting them out. So these houses are sitting empty, but they're just sitting on them as investments. Canada has experienced that. I mean, some of the real estate in Canada is absolutely outrageous. So, now you get an influx of American money, an economy that's even bigger than China's. Is that necessarily going to be a long-term successful plan? I don't know.
No, Paul, I don't think it's a long plan. I think what they think that in times like this, because of the election and other issues, there could be influx of highly skilled people from Silicon Valley, for example. And there is a new law been enacted just a week or 2 weeks ago that the waiting period to get visa for US will be only 2 weeks. Can you imagine? It's never happened before. People are waiting for years to get Canadian visa for to become a resident, and here we are talking about 2 weeks. However, what we learn now in new economy, everybody has to be very thrifty. And there was on one talk show, I heard very interesting story about a guy that he was asked what he will do. Wouldn't he be confused and upset if his girlfriend on a first date would order a lobster in a restaurant? He says, absolutely not. It's impossible. Why? There is no lobster in McDonald's. So
You get the idea. End up with the McDonald's stuff.
Could I go back to your original question, Sasha? When we build these homes, and people move into them and can't afford to pay rent anyways, what are we going to do? All right. So the idea that Homes expressed was, it's a question of human dignity. You put them in there, and yeah, they're getting forced out. They're getting evicted because they can't pay. They go into these homes and they can't pay. Well, you kind of float them for a while until the country and they get their feet back on. Now, there's going to be a certain percentage that abuses. You got to just expect it. Some people are going to abuse it, but a lot of people just need some time to recover, and then they will go back to work and they will make money and pay the rent and pay back whatever they were loaned. And this is the way that you treat people humanely. You give them a life of dignity, so they're not homeless. They're not out in the streets when we could provide them with homes, and just let them take away their pain and suffering until we are back on our feet.
well, you need compassionate leaders in order to provide that.
That's
Without
where
that, there will be no
election.
remedies, unfortunately.
Microsoft doesn't care who wins, but those people who are getting evicted care.
Well,
Yeah.
what
This
Orville
is
and our program, I would like to remind that one of the reasons that we have this program is I personally do believe that in a very near future, not too distant future, but the near future, a lot of jobs will disappear. A lot of young people will not be able to find employment. And a lot of people will have to rely on their survival skills. And in my opinion, not it's not for everybody, but for a lot of people, if they will be able to learn how to trade the market, how to survive in the market, it will be maybe for some people will be the only means to survive, to be successful, and to have a viable opportunities and build their life. Unfortunately, I'm not too crazy about this opportunity. Normally, investment is your choice. It's not something you are forced to do, but something you enjoy and something you'd love to do anyway. Unfortunately, for some people, it may be something. Maybe they will learn how to do it, and maybe they will love doing that. That would be terrific accomplishment, and I wish that would happen. Well, in any case, I would like to thank everybody for participating in our program, and I hope to see you all next Wednesday. Thank you very
Great job.
much.
Great job.
Thank you. All the best to you. Bye bye.
Bye.